Alrighty, time for the main course of this video, AMD. Alrighty, let's get rolling. So, first off, you gotta understand AMD has four big business lines. One is data center, because we're gonna look at what's going on with each of these businesses, because there's major changes going on with each business right now that I need to show you, okay? But this is the main big dog business, data center. Leadership performance in TCO across cloud, enterprise, AI workloads, right? Think about all these companies spending a fortune right now, right? All the big companies, Microsoft, Google, Meta, all of them, right? Tesla. That's more data center related revenue, right? And that's where AMD comes in play. Second big business for them is client performance and energy efficiency, productivity, AI, gaming, content creation. Then they have their gaming side of their business, right? And then they have their embedded side of the business, okay? Which could be a whole host of random things in embedded, okay? Now, if we look at revenue, first off, up 24% year over year, very strong number from 6.2 billion to 7.7 billion. Now, if you compare it versus, let's say, NVIDIA's revenue growth over the last couple of years, it looks like not that much, right? 24%, like.
So Jeremy watches the channel, and last week we kind of had a little thing going back and forth, and I know we're on his radar because we've been emailing back and forth to his team. I had some conversations with Mark and Mahesh and some other people over the weekend, and I am of the opinion that Jeremy is now pumping AMD because he is realizing that he has made a big mistake. I believe now that he sees what we've been talking about, how this is a stage 4 downtrend, and he's like, I have messed up. And because he's messed up, I'm confused and concerned. First off, Jeremy, I don't wish you any harm. I'm trying to give you some help here, and in the process, help all the outliers who happen to watch this, right? My concern is that he's digging his heels in. He's becoming emotionally involved because he has made a public declaration of, hey, I like the AMD stock. And here's the thing with trading, right, or investing. You can be wrong. You can absolutely be wrong, right? The problem is staying wrong. The problem with making a stance like this is, you know what? I think I'm smarter than the market, and even if the market's telling me it's going in a stage 4 downtrend, I think I'm gonna do a little bit better than this. And so I'm concerned for you, Jeremy. And then I noticed, he disabled the comments. And that got me really thinking, like, I think something is not going so well for Jeremy with this. Of course, clearly the market is not, the market's not buying AMD. The market's selling off AMD as fast and hard as it can. But it's okay to be wrong. It's so okay to be wrong. In fact, I found this one short by Alex Hermosi, a business guy. But I listened to it and I'm like, wait a second, this absolutely, precisely is something that you as a trader need to have like forefront of your mind.
People won't want to hear this, but what you avoid controls you. If you avoid tough conversations, your relationships suffer. If you avoid risk, your business will suffer. If you avoid failure, your growth will suffer. If you think having uncomfortable conversations is hard, wait until you see the result of not having uncomfortable conversations. Much harder. At least for me, I just try and face the thing that I'm avoiding and constantly ask myself, like, what is that thing that I'm trying not to look at? And then force myself to stare at it, because usually the thing that scares you the most is the thing that you need most to face to move forward.
I saw that and I'm like, holy moly, I believe Jeremy needs
People won't want to hear this, but
like, legitimately, I was thinking this is exactly precisely what he needs to hear. What you are not focusing on is controlling you. What you are avoiding is causing you the greatest amount of suffering. But real quick, let me introduce myself. My name is Christopher Yule. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, we're going to go through the video of the day, and then we're going to talk about the market factors that are probably driving your stocks right now. And go ahead and subscribe if you haven't done so already. So let's go back to the video of the day, and we'll watch this for another couple of minutes. But keep in mind, he's going to, and I haven't watched this yet, but there seems to be some beef developing between me and Jeremy. And I think that's kind of funny. My kids think it's the coolest thing in the world to have some YouTube beef, but whatever. Point is that Jeremy, my friend, like, legitimately, this is me talking to you here. You don't have to hold on to this stock. It's okay that you made a public declaration about how great the stock is, but you can also come and say, you know what? I was wrong. AMD's got a lot further down to go, and I'm not going to write it down. I'm going to wait till it finds its bottom. I'm going to wait for the outlier trend template to tell me it's going back up with the 10 over the 20, price over the 50. And then I'm going to wait for it to look like a stage 2 uptrend right here before I'm even interested in buying the stock. That's okay, Jeremy. You can do that. We will all forgive you. But we're not going to forgive you if you decide to dig your heels in and just watch it go down with the ship. You don't have to do that, my friend.
Put me to sleep compared to NVIDIA. But let's be very clear. AMD does not have a $3 trillion plus market cap on it like NVIDIA does. AMD's market capitalization is well under $200 billion, right? So we're not even talking about companies that are remotely valued in the same ballpark, right? AMD doesn't need to come in with a ridiculous 100% revenue growth, 70% revenue growth, 90% revenue growth. They don't need to do that. They need to put up great numbers. Let's be very crystal clear about this. 24% revenue growth. I could tell you like 99% of companies, if not more than 99% of companies in the stock market, would be happy to trade places with AMD because 24% revenue growth is phenomenal.
Agree. Totally agree. But you as the investor need to look at this and say, you know what? Even though it has 24% revenue growth, it has a negative, how many percent? It has a negative 43% investment growth since just the summer, since July. I mean, I could go back further if you want me to. In fact, let's do that real quick. It might have a year over year growth of 24% in revenue, but it has a negative 50% growth in investment. And that means a 50% loss. Hang on, let me make this a little bit bigger so you can read it. A 50% loss now requires a 100% gain to get back to where it was, right? It has to double from here to get back to what it was in March, right? Who cares about revenue growth? Like if I'm an investor in AMD, short-term trader, long-term investor, doesn't matter, and I see my money is evaporated by 50%, I'm not happy. I'm not happy at all. And I'm certainly not going to sit there and say, you know what? I'm going to let it go down to a little bit further. Let's break the context of this down, because what we see in real time is investor psychology playing out, and unfortunately on a very public scale. On a very public scale. And Jeremy, you don't have to do this, bro.
People won't want to hear this, but what you avoid controls you.
Avoiding the fact that you know AMD is going down hard and fast. You know AMD is in that stage 4 downtrend. You know that this is happening. You know you're having anxiety, denial, panic, capitulation. And I know you know because you turned off your comments. You know what's happening. And it's controlling you right now.
If you avoid tough conversations, your relationships suffer. If you avoid risk, your business will suffer.
If you avoid the risk, if you avoid acknowledging the risk that you just put on, your investment in your business is going to suffer, right? And this is why never buy the dip. There's no reason to ever buy the dip, right? Because this is a perfect example of people who said, "Oh, this is a dip you have to buy," right? And that dip came down, came back up, and then decided to keep on going down for a long time. That dip went from 180, 170, 60, 50, 40, 30, 20, 10. And it could be under 100. It could be down in Mexico drinking margaritas by the end of the day if things keep going this way.
If you avoid failure, your growth will suffer. If you think having uncomfortable conversations...
If you avoid failure, your growth will suffer. And this is what I'm trying to go back to is it is okay to be wrong. It's so okay to be wrong, right? Mark Minervini, one of my mentors, has like a 50% win rate, sometimes under 50%. Do you know how he has become so successful? It's because he admits when he's wrong and gets out of his own way. And he does that within like a nickel. He gives it so little room to go against him. And then he's like, I got to get out of the way. This is not working, and that's okay. I'm going to wait and try again.
Conversations is hard. Wait until you see the result of not having uncomfortable conversations.
Exactly. Wait until you see the result of not having that uncomfortable conversation with yourself and admitting that you're wrong. This is what's going to happen.
Much harder. At least for me, I just try and face the thing that I'm avoiding and constantly ask myself, like, what is that thing that I'm trying not to look at? And then force myself to stare at it. Because usually the thing that scares you the most is the thing that you need most to face to move forward. Is usually the thing that scares you the most.
Right. By not looking at the price and focusing on fundamentals, right? This doesn't matter. And this is why I tell you all the time, this doesn't matter when it comes to the price, right? The price is going to move, but the fundamentals are going to disconnect from the price at times. And when that happens, what are you going to focus on? Are you going to focus on the fact that they've got 24% year-over-year revenue growth, that their gap has gone up from 47% to 51%? Does any of this matter if you have your money tied up in AMD right now? I don't think it does, not in the slightest. Now, let's change gears a little bit and let's talk with Felix. I think Felix does a fantastic job. Now, people have controversial feelings on Felix. I don't care. What I care about is the content that he puts out actually understands the market cycle and how it works. Whereas other people claim that the market cycle isn't real and that they're smarter than the market and that they know when the bottoms are happening. When everybody else has anxiety, denial, and panic, they're going to buy, and it's going to be the greatest investment of all time.
That I thought I have to explain to you the actual data that's driven Friday's sell-off and might continue to drive a bit of a sell-off and what it really all means, because they don't understand the data or they're intentionally misleading it. So the first point is inflation. And I want to walk you through that. I want to walk you through the real inflation story. I want to walk you through what the tariffs mean. I want to walk you through what Elon means for your portfolio as this is the one who's trying to escape. And to start with, on Friday, what we got out was the UMIST inflation expectations. And that basically tells you how much are you thinking inflation is going to be. You might not think that matters that much, but it actually really, really matters for the simple reason that inflation is actually driven by expectations. If you think inflation is going to go higher, you're going to ask your boss for a higher pay rise, and therefore inflation is going to go even higher. So what does it actually mean? Well, we had this number that came up, and it came up at 4.3%. People are expecting inflation to go to 4.3% within a year, and I was like, really? That's really, really high.
Yeah, I don't want 4.3%. Keep in mind, now we have switched gears pretty hard right here. Keep in mind that the inflation, right, is cumulative, right? And it was driving me crazy all last year. And I made a lot of videos about this, about how they were like, oh, inflation's coming down, everything's great, right? But no, it's, if it's 3% versus 9%, 9% of course was higher based on the year before, but then it was 3% on top of the 9%. So really it's, more than 12%. And it's like, this is not a win. This is a big loss overall, right? And everyone's purchasing power has been tanked. Yeah, we have actually really changed gears pretty hard right here. I apologize. I thought this was going to be more trading centric, but I'm definitely interested to hear more about what Felix has to say. But I also want to say hi. Giovanni, good to see you. Good morning. Somewhere in Hawaii. Aloha. Mark, I am so stoked that you've been watching this, but I am not familiar with the traveling trader. So I'll add that to my list. Thank you for that. Simon, how's breadth now? We'll talk about breadth in just a couple of minutes. Manuel, Manny, good morning. Long time viewer, new member. Well, Manny, I am super stoked to see you. Christian's here. Snow, hey, I appreciate you. Felix goes live in 5 minutes. Super cool. Nico, glad you were here. Philco, hey, I'm new here too. And you look pretty sharp for a bird.
It's like a percent higher than expected. But the real data is, and I'll put these charts on the screen here for you so you can really understand the stuff that almost nobody shows you out there. And that's kind of our whole mission here, isn't it, Tallulah? Who unfortunately isn't feeling like 100% of late, but I have an assistant. I have an intern. This is Sabrina, and we're training her up. It's a work in.
Dude, I got to tell you, the animals for a prop is such a way to get views for sure. I love a good cat video, don't you? Don't you, Steven? I love a good cat video.
Progress, I must say. But if you look at the real data here, and I said, like, people are not really telling you about this because they don't understand it or they want to mislead you. And our whole mission here as a community is to give you the information that will actually help to make you money and actually give you the real deal that Wall Street looking at, which has always been my thing. And if you look at the inflation expectations by party, okay, I lost another assistant there, you will see that Republicans expect 0% inflation and Democrats expect, hyperinflation, sort of, Zimbabwe style. And I would never have thought that inflation data got political, but it just did. And of course, it's because of what media you read. And therefore, it's important to understand what's actually going to happen here, because Democrats are freaked out about tariffs. They're freaked out about Elon, capping stuff. And Republicans are thinking it's all going to work out perfectly. Well, which side is actually true? It's not about politics. It's not about who's right or wrong. It's just about pure economics. As I'm an old economist and a former banker, so let me explain this to you. So what do tariffs really mean? And I've got some notes here so that this becomes a bit more high value for you. And if you want to get some real high value out of this, by the way, you're also going to want to learn how to actually not just understand the macroeconomics, but how to actually pick the stocks that you make money.
We're going to skip his ad, of course.
From beginners can be like, every 1% increase in the effective tariff rate, so the overall tariff rate, they think it's going to add 0.1% to inflation. So at the moment, they're estimating it's going to add 0.5% to inflation one time. And that's important. remember when Jerome Powell, the nutter, printed $4 trillion extra US dollars?
Did he say Jerome Powell the Nutter? That's really funny. I actually saw Jerome Powell in person in November. I went to a conference where he was at, and being the fact that he every word he says is completely measured. Like he can't speak a word out of line. It wasn't anything other than what I'd already heard, from everywhere else. But one thing that did happen, which was, somewhat off topic, was I was leaving, and I'm trying to leave, and these two black SUVs like bully their way right in front of me. Like, we are coming in, you get the hell out of our way. And they're like on each other's tail. And I was like, oh, that must be Jerome Powell leaving right there. That's kind of crazy.
$4 trillion extra money he printed to get us out of COVID, apparently. And that, of course, then kicked off massive inflation. He said it wouldn't. I mean, I don't know what he was smoking. But is that inflation now gone? Well, yes and no. So prices are still higher, but the inflation numbers are now no longer 5, 6, 10% or whatever they actually were. They're now pretty moderate. And that's because inflation...
But of course, it's not 5, 6, 10%, but it's 2% on top of the 5, 6, 10%, which sucks.
Inflation is measured from last year to this year. So if you put in tariffs now, and you cause 0.5% higher inflation, in a year's time, there'll be no additional inflation. That's the weird warped world of Wall Street and Washington. Now, what we've also seen in the last, how many days has it been since Trump got in? 19 or something? That Trump's actually a little bit less gung-ho on tariffs than many had feared. Many thought he was just going to come in and just put 60% tariffs on everything. He hasn't. He's put a little bit on Canada and Mexico, then they've moved it back and they're discussing now for a month. He put a little bit on China. He's talking about Europe. He's talking about just leveling the playing field sort of thing. That's his point of view, of course, but it's a lot more moderate than expected. And he seems to be willing to backtrack if he gets what he wants. He's playing the same game as Japan right now. So therefore, we're unlikely to see this massive, huge tariff shock that many had feared in terms of inflation. That's a good thing. And then you have, and this is probably the most controversial thing here, Elon, because people feel like they either love or loathe the man. And this is not about politics. I want to make that very clear. I just want you to understand what actually is happening here, not some make-believe political thing. Elon keeps cutting expenses. He has so far cut $70 billion in contracts. And you can look that up at the US debt clock. They track it. That is $4 billion per day since Trump's been in office. $4 billion, right? It's quite a lot. And his plan is to keep doing that until the end of September, which would mean he's cut $1 trillion, 1,000 billion of recurring revenue spending. So money that gets spent every year from the budget. So he would have slashed the budget deficit in half. That would be tremendous. Why would that be tremendous? Because it would do two things. It would actually reduce inflation. How does that work? Well, it would actually lower interest rates. So how does that work? Think about it this way. The government has to issue debt, has to sell debt to you in order to fund this massive deficit. If they're selling less debt, they can offer a lower interest rate on that debt because we still have this massive pool of buyers, but now we have less debt. And therefore, the interest rate actually goes down. It gives the government more power in a sense because still saying there are more buyers out there, but we're now giving out less candy, right? So less interest on the candy. And that means what? It means overall finance costs in the economy go down and actually the economy starts to grow faster, which in itself will likely generate more tax dollars and likely drive the deficit down even further, which is a positive. So that's pretty good. Now, I thought, okay, Elon's going to do that. I thought it was the plan. That was pretty impressive. And that's pretty amazing. And I think a lot of that stuff is just waste. I mean, I'm sure there will be some things people disagree on, but generally speaking, why is the government sending millions of dollars to people like Bloomberg and stuff in subscriptions? Bloomberg isn't a particularly useful resource. I used to have a terminal. I wouldn't pay the 30K for it or whatever it costs nowadays. But the government,
Dude, I wouldn't either. I don't know if you've ever used a Bloomberg terminal, but like, there is such a niche market for that. If you aren't somebody who needs like specifically what you can get out of Bloomberg, everything else you can get on the internet for almost next to free. Yeah, totally not worth it. So clearly, Felix, I appreciate the fact that he knows this stuff. It's so obvious. Hopefully you learn from me. Hopefully you can learn from Felix. And hopefully you can learn from Jeremy and the things that he's doing, because what he's doing right now, Jeremy, I'm speaking to you directly. What you're doing right now is classic, ironically speaking, beginner investing mistakes that you should know better. You should know better at this point in your journey. Okay. So I wanted to really compare the two. I want to do that. Right. And I hope that you are, watching along and learning as well. And I try and make these videos, not just a criticism, but also lessons that we can all take and learn from. Coach B is here. Hey dude, good morning. Philco, I really learned so much from your reaction. Oh, there we go. I really learned so much from your reaction to previous videos of Jeremy's. And it's really taught me to look past my confirmation bias and help me cope with the bad price AMD have seen. Awesome, dude. I'm super glad that I can help with that. Like, these videos have really taken a life of their own. And you know, honestly, you nailed it right on the head. Only price pays, right? We can come up with all these excuses, but to Alex's point earlier, right? It's that you need to have that hard conversation with yourself.
If you think having uncomfortable conversations is hard, wait until you see the result of not having uncomfortable conversations.
If you want to see the result of not having those uncomfortable conversations with yourself, it's that. It's that. Well, I'll tell you what, I picked like the absolute perfect video to relate to this. Felix's video didn't quite fit in with the theme of today, but that's all right. We definitely learned something, so I appreciate that. Nico, the breadth is now 54% on stocks above their 20-day moving average. So let's chat on breadth real quick. Actually, let's shift gears. Let me go to the slide deck real quick, because you know we can't do anything without slides around here, or we might just get monkey hammered. We're not going to have that happen. All right, so normally we'd rank a video, but here's what we're going to do. Because we went through 3 videos, what I want you to do is I want you to rank the short video. I only want you to rank this video here, right? Because to me, this is a 10 out of 12. I mean, a 53 out of 10. Like, it is so good. It is so good, because it's beyond legendary. Because it can apply to business, it can apply to investing, it can apply to your life. But let's just rank this one video here, because I mean, you've watched it like 3 times now with me. There's so much of wisdom in this that I really feel like anybody in the markets can learn a ton from. So let's rank this one video right here. And like I say, for me, it's beyond 10 of 10. And while you do that, I got to remind you real quick that the annual pass sale will end this Friday. Mahesh is making a really big deal about it. You need to get it before this Friday. If you've taken a trial, go email us and we can upgrade you for for this incredible sale for just 82 cents a day, I believe it is. Yeah, you definitely want to get on that. Now, for our market analysis, what I want to do is I want to come over here to Outlier and I want to look at the breadth. So this is on the full stocks on the breadth. Now, breadth had run up and then peaked on, what date was that? It was on January 28th. Let's go to the SPY. Let's go to the SPY and let's find January 28th. January 28th was the peak. Okay. Now, looking at the peak here, this is when I said I'm getting out of the market and I'm not coming back in until this comes back up. That's one of my investing rules. And you can see right here, the market has been drifting sideways. It's been frustrating for a long time, and it's continuing to be frustrating. So while we do have the trend, the 10 over the 20, price over the 50, market breadth has been contracting. Now consider market breadth being how many stocks that we show with a buy signal in Outlier right here, right? We have 27 new names, new buy signals today versus 92 new sell signals. So the sell signals are accelerating is what I'm trying to tell you. And that is a big red light to me. Now I did see, who put it in the chat? Nico talked about this here. This is the measurement that I used to use, was the MMFI. And MMFI, this is the percent of stocks above their own 50-day moving average. This is something specifically that I got from Minervini. And this has the 10, the 20, and the 50. Look, it's like I've been doing this for a while, right? This has the 10, 20, 50. This is also starting to cross back down as well. So it's not just the outlier breadth. This is the number of stocks above their own 50-day moving averages. Something that, I don't know. I don't know how many people use this, but it's something I use for a long time that I got from Minervini. And this is also starting to come back in. So to me, market breadth is definitely coming out. So that's where I wanted to go with the market analysis to let you know, like, market breadth is still pulling out, while the market trend is somewhat sideways, somewhat bullish, somewhat sideways. I would call this a cautiously bullish trend, especially because you've run out of breadth, or not run out, but running out of breadth. It's not looking too hot to me. Hey, that guy. So funny watching him answer the Q&As. This guy's always super vague. I assume you're talking about Felix. That's all right. Summer Hawaii. Bro, I sold my AMD. Take the loss. Get money into something going up. Yeah, get something that's going up in this stage 2 uptrend. That's all you got to do, right? Just hang out, wait, don't. Here, this is my rule of thumb, right? Sit in cash and don't F up, okay? Sit in cash and don't F up. If things aren't working for you, don't be on this side. don't be on this side. You sit in cash and you don't F up, right? Because those losses work against you so much faster than your winners do. Philco, there's 100 out of 10. Simon, a 10 out of 10. Nico, 11 out of 10. Yeah, this is a bomb ass video. I don't know if the cool kids say that anymore. Maybe it's too skibbity, or maybe it's too brain rot for them. But for me, it's a bomb ass video, right? Is there a reason to use TrendSpider over TradingView? Actually, so Steve Burns was one of my mentors. You may or not have heard of Steve Burns, but Steve Burns is an author that's written incredible books. One of my all-time top 5 favorite trading books is called New Trader, Rich Trader. Highly recommend that. He introduced me to the management team at TrendSpider. I know several of them personally, which is why I use it. Now, it is expensive, like really expensive. And looking at other things like TradingView, it's outrageously, outlandishly more expensive. And that's the reason why. It's just because I know the guys there. But we at Outlier are planning on making it where inside of Outlier very, very shortly, the charts are going to be as snappy as this. I'll never have to use anything except Outlier. So it's going to be great. Coach B, watch Chris Williamson interview with Hermosi. Yeah, I have. He's done several. I like Chris Williamson. I like Hermosi. He's done several. Yeah. Simon, could it turn soon? So this is ultra cyclical. In fact, I think I must have closed it. Let me go back. Oh, no, I didn't. It's right here. This is super cyclical. And you can see it right here. It's usually about a 2-week swing either direction, right? Now, that doesn't mean that it has to swing either direction, right? It can go pretty deep. It can go pretty deep for a while. Like this is a decent example here. This happened November 23, where it peaked and then came down, kind of did a little head fake right there, and then continued down until January. And then the crossover happened at late January. So it was 2 full months before it actually started to get bullish again. But usually it's a couple week cycle up and down. You often stay out for months. Oh, yeah. So the last trade that I put on was November. I think it was November 22nd. And then I traded twice in January. So I didn't trade at all in December. And I only traded 2 times in January. Right. But that's the thing. Trading strategies only set up, mine or anyone else's, about 40% of the time. 40% of the time is all you need to make a buttload of money in the market. The other 60% of the time, sit in cash and don't F up. You're welcome, my friend. I'm glad you're here on the live. Manny, where do you see the order blocks? So the order blocks, I see them in TrendSpider. I know that there are order blocks in TradingView. We go look at some order blocks on here on AMD, like the bearish order blocks above and bullish order blocks below. That is something that we're actively doing R&D on to put into Outlier as well. So it should all be in one spot. So it should be great. But listen, I really want you to tell me in the chat what you're trading, of course. And don't forget the only price pays. And be sure to come back tomorrow. We'll help you save time, make money, and start winning with less risk. Thank you so much for being on the live stream today, right? We want to do this together as a team. YouTube is going to pop up a couple recommended videos. I recommend you watch one of them. And I also recommend you have a fantastic day. We'll talk soon.